Hi friends, Professor Joe here. I hope you all are doing great. And welcome to this new video in Masters of Stock Market. Now, since we are getting ready to become a master of the stock market, we need to understand where this stock market started from. What is the history about stock markets? The stock market started in the 16th century. Yes, it started in a place called Amsterdam. It's in Europe, and that's where the stock market journey started. Eventually, then it grew in the European countries, that is, grew in London especially. And then from London, it started growing in New York. So up till the 18th century, the major stock markets were in Europe and in US. It was in 1850 that in India, the stock market journey started. 1850. The first stock transaction took place under a banyan tree, and this banyan tree was located in a place in Mumbai. That place today is called the Bombay Stock Exchange. So in 1850, the first transaction took place. And in 1875, around 22 brokers came together, and then they created the first stock exchange in India, official stock exchange in India. The stock exchange was called as Native Shares and Stockbrokers Association. So this was the first association that was formed in 1875. And since then, the stock markets in India have never seen back. It's just kept growing. Now, the regulatory body of stock exchange is called as SEBI, Securities and Exchange Board of India. Now, BSE has been operational since 1875, right? So there has been a lot of evolution in BSE, and things were keeping on growing within BSE. In 1992, there was the Harshad Mehta scam, and that's when the government decided that SEBI should be given a lot of powers to make sure that they monitor what's happening in the stock exchange. So that's how it became an autonomous body in 1992. And since then, SEBI has been performing greatly. And if you see the index of our stock market and the number of companies that have come into the Indian stock market, it has continuously kept growing. Currently, SEBI has its head office in a place called BKC, which is called as Bandra Kurla Complex, which is located in Mumbai. In India, there are two major stock exchanges, BSE and NSE. Now, currently in BSE, there are around 5,000, 6,000 shares that is being traded. And the index of BSE is called as Sensex. Okay, it is also called as sensitivity index. So there are around 30 stocks. Now, these 30 stocks are from different sectors and the most performing stock in their own sectors. So when these stocks are performing well, the index goes up. And when these stocks are not performing well, the index goes down, in a way trying to say that even the best performance company is not performing good right now. That means the market is going down or in a bear market. And the good stocks, when they start performing, we call the market to be in a bull market. The second stock exchange in India is called the National Stock Exchange. The working started in 1992. But it started performing its activities in 1994. Now, NSE is a very high-tech stock market. So if you see the option trading and exchange-traded funds trading, all these high-tech technology trading is happening in National Stock Exchange, that is NSE. NSE also has this index. It is called as Nifty 50. There are many other indexes within NSE also. We'll have a look at that too. Now, Nifty 50 is basically a compilation of 50 companies from different sectors. Now, this is an old distribution, but this is how the distribution of the companies and the sectors look in the national stock market, where you can see the financial sector is the most heavy sector. So banks like HDFC Bank, ICICI banks, they play a massive role in moving the stock markets up and down. And then the large cap companies like Reliance Industries, Infosys, Tata, these companies also play a very, very important role in the movement of the stock markets. Well, that's all in this video. Thank you. Namaskar.